Hi, welcome back to my channel. My name is Sarah from Meridian Accommodation, and in this quick video I'm going to explain to you simply how to become income tax efficient as a property investor. So remember to like if you find this useful and subscribe so you can see all future videos that I post. Let's get into it. So to help explain this concept, let's imagine we have two identical people. Let's call them Chris and Sue. Now Chris and Sue are identical in every way. They have the same properties, they have the same jobs, they have the same incomes. That's the important part. Now let's imagine they both buy this property here. It costs them $90,000. They have an interest-only mortgage of £67,500 at 4.5% interest. And they get the rent of $650 a month, and then these are their expenditures. So their mortgage payments are £253 a month. They've got maintenance of £80 a month. Now we work that out because roughly a 3 to 4 bedroom property has a maintenance bill of £1,000 a year. So divide that by 12, gets you the £80 here. So the building's insurance will be about £20 and the letting agent fees will be about £78 per month. You should always use a letting agent. Don't try and do all that work yourself. So when you minus all of these off the rent, you get a net income of £219 per calendar month. So let's now look at how we can use this example to become tax efficient over time. So let's imagine that our first person, Sue, she hasn't watched my video on good debt versus bad debt. And by the way, if you haven't either, click the link in the description below and it'll take you to that video. Give it a thumbs up. So she hasn't watched my video. She believes that debt is really bad. She's a saver. So she goes ahead and pays off this £67,500 mortgage, and her mortgage payments each month go to zero. That £253 goes straight to her bottom line of profit. So her net income is now the £219 plus the £253 per month. She's thinking, great, this is wonderful. But there's a slight issue. So what do you think the government's reward is to Sue for paying off her mortgage? Remember at the start we had Chris and Sue, and they both had the exact same situation, but now Sue has paid off her mortgage. She's got an extra $253 on her bottom line. Well, the reward that the government gives to Sue is that she now has to pay an extra £100 a month in tax if she's a 40% taxpayer. So that's an extra £1,200 per year of tax that she has to pay. Not very income tax efficient. But Chris, he's got another issue. So let's go have a look at what Chris's issue is as well. So let's look at Chris's situation now. Chris didn't pay off his mortgage, so he's still got this £67,500 mortgage. And if he was clever, he would have taken that money and gone and bought more investment properties so he could get the equity growth of those as well. But let's just look at this example here. So every single year he will increase his rent by 3 to 5%. So it will go from $650 to $670 to $690 to $710 and onwards each year. Now the issue with that is if he's not careful, that extra money will go straight to his bottom line in profit. And he'll have the same issue as Sue that we talked about before, where her income tax will increase. So to offset this, he can do two things. The number one, he doesn't really have to do anything. His maintenance payments will increase over time due to inflation. So eventually this will go up to about £90 a month. That's not enough to offset the big increase in profit up here if it goes to his bottom line though. So the second thing that he can do is he can go to the bank and get the property refinanced because his property will go up in value. On average, the property market goes up 7.9% every year, and it has done this consistently for the last 80 years. So he can be pretty confident in going to the bank once his property has gone up in value and asking them to refinance it and remortgage on a 75% loan. So his mortgage payments will go up, but the bank knows that he'll be able to pay them off because he is increasing his rents every single year. So his mortgage payments will go up, and his maintenance payments will go up, and these will offset the extra rent that he's getting from putting his rent up. So overall, his net income will stay roughly the same at this £219 per calendar month. And that's how he can remain income tax efficient. So the main thing to remember here is, as your property goes up in value, increase your debt against it to remain income tax efficient. So I hope you enjoyed this video. If you want to learn more about the benefits of refinancing your investment properties, I will be making a video about this really soon. So remember to subscribe and hit the notification bell to be told when I post that video. As well, remember to give this video a big thumbs up if you learnt something new, and I will see you in the next one. My name is Sarah from Meridian Accommodation. Happy investing, and I'll see you soon. Bye!